Hi everybody, today we're going to talk about how you can avoid getting audited by the IRS. If you're new to my channel, welcome. I hope that you consider subscribing and ring the bell to turn on video notifications. You know, the IRS enforcement has substantially increased over the past couple of years, and that means that the IRS employs more agents now, and it has a lot more capacity to perform audits and reviews. The IRS just got $80 billion in mid-2022 to hire more enforcement staff and to implement modern software such as AI to enforce tax compliance. And so in my video today, I want to quickly explain what an IRS audit is, what red flags may trigger an IRS audit, and the things that you can do now to prevent being one of the lucky ones who gets audited by the IRS. But first things first, what is an IRS audit? An IRS audit is a very detailed review of your tax return or returns. There are two types of an IRS audit. The first is by mail, and it is technically called a correspondence examination. The second type is face-to-face, and it typically takes place in person at an IRS office or at your place of business. The decision whether or not it is by mail or in person is made based on the complexity of your business structure, the complexity of your tax returns, and essentially the red flags that led them to select you for an audit in the first place. One of the questions that I typically get asked is, how far back does the IRS audit? Generally, the IRS can include returns filed within the last 3 years in an audit. If they identify what they refer to as a substantial error, that is their term, substantial error, they may add additional years. But they typically don't go back more than the last 6 years. Now, this brings us to those red flags that you want to avoid at all costs. I will have an entire video on my channel about IRS audit red flags. That will be a more detailed video, so if that is something you're interested in, let me know in the comments and make sure that you stay tuned. The first and probably the biggest red flag is failing to report all of your taxable income. You would be surprised how often the IRS catches this. Report all of your taxable income, whether it is your W-2, your side hustle income, or your investment gains. The IRS already knows about them anyway in many cases. Make sure that your taxable income is accurate. This is key. Another major red flag are excessive deductions and tax credits. The IRS will compare the itemized deductions and the credits taken to the average totals for similar taxpayers in the same income bracket. And then if yours happens to be higher, the IRS may look at the numbers more carefully. The third red flag that I want you to know about is engaging in cash transactions. Under the Bank Secrecy Act, various types of cash transactions in excess of $10,000 are required to be reported. These last 2 years, there are additional reporting requirements for apps, Venmo and PayPal. So if you make large cash purchases or if you make large cash deposits, be prepared for a letter from the IRS and make sure that you have documentation to show what services you provided in exchange for that cash amount. What can you do to prevent an audit, right? That's one of the biggest questions. There are several steps that I want to share with you today that will help you avoid a tax audit. The first step is avoid Schedule C and Schedule E if at all possible. This is for those of you who have a business or even a side hustle that brings you money. Reporting your business as a sole proprietorship on Schedule C will increase your chances of an audit. An easy option for you to fix that would be to form an LLC and then report your business income under your LLC. If you have a partner, then of course you may want to form a partnership instead. I will be uploading more videos about various business structures and the advantages and disadvantages of all of them. So if you're interested, once again, let me know in the comments. That's how I will know that there is interest. If your small business reports consistent losses, It may even get worse for you. The IRS could easily argue that you're operating a hobby, not a business. That would not be good because it would mean that all of your business expenses that you claimed as a deduction, that you claimed as a write-off, would be disallowed by the IRS, and your tax liability in turn would increase. On the other hand, if your small business is really profitable and it is your only source of income, you would see a lot more savings with an S corporation, and then it will help you reduce your chances of an audit by approximately 15 times according to the statistics. This would allow you to take those write-offs and not worry about it at all. Step number 2 is avoid round numbers. This is an easy one, but somehow we're all drawn to simplify numbers and just round up our expenses to take the write-off. The IRS doesn't like that at all. For example, let's say you have several rental properties and you purchase a new dishwasher for one of your properties. The dishwasher costs, let's say, $435, but you go ahead and round it up to $450. This is a major red flag for the IRS. Don't round up, and good bookkeeping will help you avoid making these mistakes. The third tip that we'll chat about in this video is payroll. If you have an LLC that is taxed as an S corporation, you are considered your own employee. So try not to get behind on payroll reports and withholdings. Remember that if you own and operate an S corporation, it's just as critical to run your payroll regularly. The IRS will notice that none of those things are being done timely, and it may cause an issue. A good way to make that simple for you is to use a payroll service. Gusto is an amazing company, and it's really easy to sign up for their services, and you will never have to worry about them again. If you use the link in the video description below, Gusto will send you a gift card for signing up. The next thing you're going to want to start doing is issue your 1099s. This is another big issue that many small business owners run into. Nobody likes dealing with 1099s. I completely understand, I know, but it really is an area the IRS pays a lot more attention to. When you're claiming deductions for paying contractors, you need to issue 1099 in January of the following year so that you and your contractors can file your tax returns. Again, a payroll service will do that for you. You will not have to worry about it at all. And here's a quick tip for you to make your 1099 process easier. Always request W-9s from all contractors before you pay them for their services. That way you have their information and you can easily issue 1099s when you need to. My tip number 5 is very simple. File your tax returns on time. Please take time to do it even if you owe taxes but cannot afford to pay. That situation is in and of itself very bad, but not filing a return because of it makes it 10 times worse. I realize that many taxpayers may not have the money for taxes, so they simply don't file. They hide and then they avoid filing again. This only causes more problems down the road and personal stress levels that you can't imagine. So I encourage you to still file even if you don't owe anything or don't have any income. Penalties are worse if you don't. You can always get on a payment plan with the IRS or even be placed in an uncollectible status. Now leave me a comment below and let me know what other tax-related topics you're interested in. If there is enough interest, I will upload a video to help you out. Thank you so much for watching this video. I hope that you found it helpful. Make sure that you subscribe and give this video a like if it helped you. And I'll see you in my next one. Take care.